Good morning, everyone. Welcome to Apple Markets. My name is Chris. Today's focus, of course, as always, on technical analysis, but today's specific core focus is actually candlesticks and price action. So we'll dive into that in just a second and take a look at the currency pairs. First of all, though, be aware that this is shown to a global audience. This live webinar may not be suitable for everyone. Take a look at ivomarketsglobal.com, select your country of residence, and contact the appropriate entity for more details and information. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. But continuing watching this webinar, you agree with this disclaimer and also the recording later on, and you are aware of the risk involved when trading. Okay, thank you so much for your attention on that. So we're going to be looking at price action and candlesticks. You can use those, of course, to read the market sentiment, the momentum, basically get a bit of an idea who is the winner at this point, the bulls or bears, and deciding based on that, we can make potential trade plans or trade ideas. The things I look at basically are always trend and momentum. I can, in some cases, use trend lines, moving averages, and the oscillator for that. But today's focus will be on candlesticks, so we'll use that to define the trend and momentum. Then my standard method of approaching the market is always looking for a pullback within the trend, followed by a continuation. So a pullback could be a pattern, it could be a level of a fib, for instance, that helps give support or resistance, and a potential bounce. What we want to make sure, though, is that trades are not too close to any particular very important support or resistance levels, so that there perhaps isn't any space. That would not be good. So that's something you want to check beforehand. If that's good, then I'm looking for continuation. I check at what decision zone I would be interested in, what level would I be interested in to trade, and I decide for myself what triggers do I like to see. That could be a candlestick pattern, for instance, at the 50 fib, like in this case, or it could be the break of the falling wedge chart pattern indicated by the red and green lines. The break of that could be the trigger. So, that's the analysis I do regarding the trading, the specific, the trading that is derived from the analysis, and I look at the reward to risk and see if that's still okay for that particular setup. All right, with that bit of a background behind us, let's take a look at the calendar. All right, we got some green and yellow news events coming up. Inflation rate on the pound. Oh, sorry about that. Let's see what else. Maybe the dollar later on. Retail sales. All right, a long list today. But I think only two of them are marked with red, which is the most important: inflation rate for the pound and retail sales for the dollar. There we go. So your dollar basically at this moment, what do you guys think? Let's take a look at the daily chart here. Zoom it a bit out. Let's take a look at this view, or perhaps this view, I'm not sure. Both are good. What do you think? Is there a trend? And if yes, what is the trend at this moment on your dollar? Let's start with the first point here and work, each of these factors or each of these points or criteria one by one. The first one is trend and momentum. Let's start with trend. What do you think? Is there a trend, first of all? And if yes, which direction? I'm kind of interested in what you think about this euro dollar. We'll start with the daily chart. And there are many ways to look at this. I'm already revealing part of the answer probably, but so that's why I'm kind of curious how you view that. If you want to zoom into today's or the last few days price action, you can do that right like this to give you a bit more context. You can see here the daily candles a bit better. Blue, of course, bullish. Red are bearish. For candles, it's very important, of course, to look at if there's wick on either side. Is it the sizable candle? Is the candle closed near the higher low? How far is it away from the higher low? Typically, 25% is good. Within 25% close of the higher low, it's a relative strong candle. The less the better. I mean, if it's a 5 or 10% margin, if there's only 5 or 10% wick, then the bears or bulls are really good in control. Anything from 10 to 20 is a decent control. 20 to 30 is a bit weaker control. Less than or more than 30, right? 30 to higher is not much control, right? Take a look, for instance, at these candles right here. We see a lot of wicks. Do the bulls have control? No, the bulls do not have control. So a wick on top of a candle means that the bulls are not as strongly in control, or perhaps losing control in that day. This is a daily chart, right? So it's very important to look at that, at these factors. The close, what is the close compared to the previous close, to the previous high and low? And if you're curious, about more information on that, we actually had a 2-part series. Perhaps you joined us already last week Thursday and the Thursday before that, and you can find that pretty easily by going to basically going to youtube.com, then looking for Admiral Markets, and then you can basically find videos, uploads, the newest uploads right here. But if you're looking for that specific video, I think you need to here, price action part 2. And there's a price, just go on part 2 and you'll find part 1 when you click on part 2 on the right side. So I recommend taking a look at that if you haven't already by any chance. That when you have a time, I think it's definitely worth it. So still waiting here for what you think is the trend. Still waiting for a bit more answers here. All right. Anyone else? As I always say, don't worry about answering. This is not, a quiz or a test, and if you fail, you'll get some punishment or something like that. No, it's just feel free to test your own opinion and see how that matches up with mine. All right. So we got 3 answers so far. All right. I hope we'll get more answers in the future. Ergo says primary trend has been bullish, secondary is bearish, which I think is a good answer. Edith says long-term uptrend. I agree with that too. Mario says long up, short down. I'm not sure, not strong. Not strong, I agree that nothing is really strong. Oh, long-term is up, short-term is down. Got it. And that's the same as Ergo. Yep, I agree with that too. Yeah, I agree with all of these opinions. I think primary indeed is uptrend at this point. Still uptrend due to the fact that we can talk about a channel that has 3, 4, 5 hits perhaps, depending on how you count it exactly, on this weekly. This is more of a weekly, daily channel. So we can definitely talk about an uptrend here using these channels. But even if we don't use channels and we look at price just like without a channel like this, you can see there's an upward slant. Price is higher on the right than it was on the left. So just simply looking at that, we would be able to make that conclusion too. And the recent downside could just be a retracement within this channel, or it could be indeed the start of a reversal. It could be start of a new trend. But in that case, this channel would have to break, and this bottom would have to probably break before we could really talk about a long-term downtrend. At this moment, we couldn't do that because of this formation. If we look at recent price action, we certainly see a lot of bearish candles here. But at this point, we actually, I would say, are having dominant bullish candles. Yes, we got 2 bearish candles too, so there is a bit of a mixture going on. And from that point of view, we could say there's a triangle, we got support here, we got resistance kicking in like this. So from that point of view, we will only really find an answer or a breakout until one of these two breaks. But looking at candlesticks alone, all right, let's take this off. I think that this recent bullish candle in combination with the big momentum bar still is sufficient to say that we're in a bullish environment on looking at daily candles. Looking at 4-hour candles, all right, I would say we're also in a bullish environment considering the two bullish candles we had yesterday and then the follow through here as well. So as I said last week Thursday, two bullish candles of which the second primarily is a reasonable strong candle or a decent sized candle with a decent close near the high. I think that this one qualifies. Normally indicates a bigger correction. So we already have that bigger correction. Now it depends how price is going to react as it retraces. Is this momentum over? Oh, sorry about that. Or will we see a follow through? I think it's going to really depend a lot on this 4-hour candle. If this closes bearish like this, then I think that the correction on the 4-hour chart is over, or is a good chance it's over. If this ends up in a big wick like this as a doji or small bearish candle with a pretty decent wick on the bottom, then I think that that was just a retracement of that bullish candle, right? This is a pretty sizable engulfing twin, but that engulfing twin is that power of that, let's say power, the value of that bullish candle is not going to last forever. Typically, I don't want to wait too long for follow through. My rule is about 5 candles. This is candle number 4. So if today we do not get a follow through to the upside, then the value of this 4-hour candle is lost. It's not there anymore. All right. And if we have a bearish candle here, then we have again 2 bearish candles into the downside direction. Kind of, how do you say it? In a way, marking the fact that this could be just a correction. Just like we had 2 bullish candles here marking the end of this downside, 2 bearish candles here could mark the end of this bullish correction. So that's why I was asking you what you think about the euro dollar, because I think there's a lot of things. Yes, we're on an uptrend, but from a price action point of view, I think there are a lot of mixed arguments here at this point. There are a lot of mixed candles, a lot of mixed momentums, up and down, both on this 4-hour chart, but also on this daily chart, right? Up, down, up. 4-hour chart recently, up, down. So that is making things quite complicated, I would say, or not as straightforward on the euro dollar at this point. So at this euro dollar, we're looking at the 4-hour. I think that the bulls are still in control, considering that this is at the moment dominating. Let's take a look at the hourly. Unless, as I said, this 4-hour candle closes something like this. And let's take a look at the lower time frames. I think that, let me check, 1 second. Let me check when this 4-hour candle closes. And I can do that with the Admiral Markets MetaTrader 4 Supreme Edition. And it should show me, let's see, candle countdown. Let's try that. Not sure. Anyhow, not sure why it should work, but probably something that I'm doing wrong. Anyhow, we can take a look at the time here. Let's see. It is 8 o'clock. So we got a couple of hours left, I think, on this candle. 3 hours left. So the hourly has 3 bars left. We'll have to see how those three bars continue. And how they manifest to make this 4-hour candle. I think that the next, now obviously this is a bearish candle, but we know from the 4-hour candle that this could easily be a retracement. So for me to take a long in here in the next 3 hours, right, I would need to see 2 bullish candles, basically like this, and then the 3rd hour I would be able to take a long. Then in that case, the 4-hour candle will probably end up like a doji, and we should see a follow through to the upside. So if we see an hourly candle, we see, for instance, something like this. We probably will see a break of this low. We see a candle that has a wick like this, and if it does close bullish like that, and then another candle like this, then I think that that is a signal of upside. The 4 hour candle, there will be one more candle to the, maybe this will be a doji, something like that, the 3rd hour candle. The 4 hour candle, all these 4 hour candles, these 4 1 hour candles, right, will make one 4 hour candle, right? That will look probably something like this. If here's the open and the close at the same point, then we'll probably have some 4 hour candle like this. All right, if we get hourly candles like that, that would be indicating a bounce due to the wick. That would indicate that the downside was a retracement and we got a reaction as price bumped into support. And I think that there's a good chance that price will go higher after that. All right. In that case, I think price, if we can use a fib for instance, price will probably rally up to the minus 61.8 target at 113.50. That's the same target I was talking about yesterday in my weekly video. Perhaps you saw that as well, which could be a resistance spot. Let's take a look. It's a 61.8 fib and a minus 61.8 target. So there's two golden ratios at the same spot. And that is always, of course, a strong confluence. All right. Now, what if that doesn't happen? And what if we get downside? What if this candle ends up like a small bullish bearish candle like this? And then we get maybe a small little bullish candle, but it has more of a wick on top of it. And then again, a doji. So I don't know. I'm just making it up. Well, in that case, we will have, of course, a bearish 4-hour candle, something like this. Right? These four candles will translate into that candle on the 4-hour chart. And I think that in the New York session, I would look for lower time frames for retracement of that 4-hour candle. Probably I'll put a fib from here to here. Probably look for the 38 or 50 fib turnaround and look for a follow through to the downside. You could connect, I guess, support line like this. That's still a bit further down, I would say. You could connect maybe these 4-hour bottoms like this, but maybe if you want to connect, you have to cut through these candles a bit. That's sometimes okay. You would have a line like that. So as expected, the momentum candle here is pushing price lower, and that's not so strange because this is a pretty sturdy candle, 1-hour candle. So as I said, we will probably break this low. But considering the fact that I think that the 4-hour candle has such a strong, or has a decent strong 4-hour bullish candle, I am not willing to take short as yet, unless the 4-hour turns bearish 3 hours from now. All right, so that's basically very excited. I think I'm very interested in to see how this continues. It's an interesting development. I will find out, sooner or later if this is just a retracement for more downside or if this is a retracement for more upside. I think that really, really depends still. It's hanging in the air. We did have a bullish daily candle, so this could easily be a retracement of that. Weekly was actually bearish, so if price does move up, we got to be careful indeed that 113.50 could be a turning spot because price is perhaps just retracing this week's bearish candle. And in fact, if we do move up like this, we could hit the resistance and move down to challenge the lows in here. And we could easily just have kind of a move up to test resistance and move down to test support and end up at the same spot we began this week with kind of a heartbeat day and just extending this triangle formation that we have to a certain degree on this chart, on this 4-hour chart primarily, I would say. Sorry. All right, so that's my view on the euro. Let's take a look now. If you have anything to ask, by all means, feel free to ask me, no problem. Let's take a look at the pound USD right now, and I will be doing the same thing now. So get your keyboard ready for answering this question. Let's see. Okay, let's see. Is obviously bearish momentum at this moment, right? I don't have to ask about that. Let me ask you, how would you trade here, considering the fact that yesterday was a doji? Would you trade here? That's maybe, I was trying to formulate a question that makes still, more sense to think about. Is this bearish momentum? I don't think is really a good question. I think everyone can see that. We got strong daily candles to the downside. So is this a good spot to go to take a short, considering yesterday's doji? Last week was a bearish candle, and we basically had a bit of failure here to break this top, right? We got 1, 2, 3, 4 candles, fifth candle last week, not breaking this. We also had a trendline break. Now the pound is going to be a bit tricky the next 10 days or so, in the sense that we will, of course, have the referendum on Brexit in Great Britain, deciding if they want to continue with their membership in the EU or exit, also called Brexit, the EU. And that's, of course, a big event. So that's not going to be easy to... it's going to have its impact on the financial markets. It's going to have its impact on the pound the next 2 weeks. That's going to make things sometimes unexpected, a bit different. Some things, there could be effects that we don't even think about. Who knows? It's going to be a bit wackier than normal. That's just how it is. All right, so only one opinion. The rest, I guess, are neutral. They're not saying anything. So, well, it is a yes, according to Assam, but Assam is already in the trade, up 35 pips. And if you took that trade 35 pips ago, then that's a bit of a different story. Now it's right at that candle low. It's a doji. I think it's a bit of an indecision candle, obviously. So if there is a low that close, I don't like shorting it right into lows, and I think that that's a bit too close at this moment. I think we need a break of yesterday's low to have a bit more clearance of that level to search for intraday shorts to the next support level. So I don't think at this moment it's the right spot. But if you look at the 4-hour chart, you can see that basically we had a good momentum to the downside, and we had 2 bullish candles, but look at this pretty big wick here as well. So this bullish candle is not a reversal candle. This is due to the wick. It is definitely not a strong retracement or reversal candle. If it were a close right up in here, that would be a different story. But due to the wick, I think that it was already clear that this was not as strong of a reversal. We got a bit of bullish candle, small bearish candle, 2 bearish candles after that, and we're falling after that. So anytime, anyone who took a trade about an hour, 10 minutes ago here based on these 2 bearish candles, I think is doing great, was a great decision. Now it's a bit late because we're approaching this bottom. All right, 1-hour chart, you can see some good bearish momentum, and we had 2 bearish candles here in a row and here in a row again. So we can see slowly but surely this price moving nicely lower. I think that this moment I don't see how to enter a trade unless we have this 4-hour candle closing. Perhaps price retraces part of that candle, and then look for a retracement, maybe to test this candle high, for instance, and look for a short as a continuation. The next support level we're looking at is 140, roughly 140.50, perhaps 139.50. It's around this zone here. as you can see. Support levels right about there. And that would be the next kind of horizontal support level to be wary of. So, if this 4-hour candle closes, something like that, I think something with a good momentum, there could be still some pips to the downside, about 100 to 150 perhaps. And let's see, this would need to be at least, yeah, this is already a good 57 pip candle. So I think even I probably would use a stop loss above this candle high, to be honest. If it starts to retrace, look for a short somewhere halfway, put the stop loss above it. It's a small risk. It's a risky stop loss, but it does enable a small stop loss and then a decent reward size compared to that risk. Now, if this candle closes with a wick that is more than 25%, then I think that invalidates any shorts, because then in that case, there's some reaction to this support level, and in that case, price could retrace higher, perhaps to retest this wick before moving down again. And I would definitely not use this candle high to use as a stop loss. Also, once we get bearish candles to the downside, I will be trail stopping these candle highs to reduce risk and lock in profit. So this is good momentum. Let's see how far it pushes. I just see now that Asim closed this trade. I didn't mean to necessarily scare you out of a trade. That was not my intention. I just wanted to say that shorting it now is not a good idea, I think. But holding on to a trade, maybe I should have mentioned, is nothing wrong with that. I didn't realize that you would do that. I mean, it could be still an okay decision. I don't think necessarily closing it is really that important at this moment, unless this candle has a wick here, more than 25%. If it's anything like this shows good momentum. All I wanted to say that for people who want to short the pound dollar, because it is moving down, I don't think that now is a good spot. I'd rather wait for this candle to close, wait for a bit of retracement, and then a follow through. That was the reason why I mentioned it. Ergo was asking about the poll yesterday, and indeed, for the first time ever, there are, if you look at the combined results of various polls, then the leave camp is, for the first time since the polls since the measurement, since this combination of polls has been measured in this graph, September 2015 that I saw, it's the first time that the leave camp is ahead since September 2015, and so, which is of course in a way it's a unique kind of development, because it's the first time they're ahead. The state camp was always in charge, in the lead. So that is quite an interesting development. We have, what is it, 10 days left? Yeah, 9 days left. There's still some people undecided. I guess those undecided people will be the ones that ultimately make the decision. The gap is still relatively small if you look at the combined numbers. So it all depends about those indecision people, I guess. What they choose, will they vote, and what will they vote? Then tonight I'm going to have a webinar on that, actually. Might as well tie it in here. On Thursday. And on Tuesday. Next week, Tuesday. And this week, Thursday. All right, so you can go to Admiral Markets, click on Education, and then on Webinars. So, dollar yen. We got big momentum to the downside, looking at this daily chart. And honestly, when I saw this bullish pin bar here, plus this bullish candle, I thought we would get a bounce. But now that 2 days have closed beyond that, I think that is becoming less likely. We do have still a big bottom in play, and I think that is an important level, so I wouldn't short it right in front of that. I wouldn't go long either, considering the downside momentum on the daily and even the 4-hour and even the weekly, right? So from that point of view, from price action point of view and candlestick point of view, I think we're going to get a break of this bottom. And the next support level to worry about is, in my opinion, this fib, monthly fib at 175, this bottom as well here. Plus we got some tops here and closes, candle closes. So I think that's the next support level to be concerned about on a higher time frame. So when price pushes to this bottom, which I do expect, but I'm not actually want to trade it right now, although I expect it, I would rather wait for a break. I'll tell you how in just a second. I do expect a break, and if it does break, then I think we got, from a weekly perspective, the space to 175, 100 area. What I've been looking for a break is basically a daily candle that can push below this bottom. The bottom is at 105.54, so I'm looking for a daily close that can close below 105.54, that can close near the candle low, like this, not more than 25% wick on the bottom. Something like this is a daily candle. In that case, I'll be looking for a retracement this week and for a continuation this week. If we don't get that, and today ends up in a bullish candle, then I would want actually tomorrow to be another bullish candle before I think about longs. I want two bullish daily candles basically before thinking that this could be double bottom, for instance. So from my perspective, it's all about this daily candle, this daily chart. I don't think it makes sense to look at lower time frames just because I think that it's too little information on this time frame. I think that the only answer that will give me real value is looking at the daily candles. So whereas on the euro dollar, I'm looking at the 4-hour chart to provide me, to help me, give me guidance. On the pound too, on the dollar yen, it's the daily. I would not want to take a long on a 1-hour chart if there's a bit of 1-hour bounce, because I think it's, considering the trend is down, the momentum is down, it's too weak. I would need to see, for instance, here some small bullish candle like that, then tomorrow a candle like this, then I would look for a small retracement, and then look to take a long right there as a bounce off the double bottom. If we do get a break, then I want to see it close and hold that level, basically, right? Because how about if this happens? You get an intraday push, but we get a wick at the bottom and the candle closes like this. Then that's more than 25%. I would not be interested in shorting it because there is a decent chance that was just a false break in a way. I mean, it was an intraday push, but the bears did not hold control. They don't show enough strength to keep that level and keep this candle bearish, and I would not be interested in shorting it because of that. So for me, it's all about this daily candle. So we can keep an eye on that. Aussie, let's take a look at the weekly. Monthly was bearish. We got 2 bearish candles on the monthly. In fact, it's an interesting situation because we had a strong bullish candle here, but now we have 2 bearish candles. So this could be a retracement, and these 2 bearish candles could mark that end of the retracement. Weekly candle strong, but doji after that, showing indecision. I don't consider this a reversal candle necessarily, but it is showing exhaustion and struggle for the upside. Daily, we had 2 candles ready to the downside, decent candles. So I think from that point of view, it is looking a bit more bearish. If this candle closes something like this, that would be engulfing twins. We already had a couple of bearish candles here, smaller bullish candles. So if we have engulfing twins like this, I think it could be an interesting candlestick pattern. I think that could signal the end of this correction to the upside, and it could start the continuation of this downside momentum. If we just add a fib here, we had a 38.2 fib bounce. I think price could fall to its main target, the 61.8, maybe pausing at the minus 272. Main target at around 72, close to 72.50, just a bit above it. And I think that as long as this candle close is near the low and not more than 25%, that's a strong bearish candle, a candle that keeps control, as I already said a few times today. And it could be worth an entry right there with a stop loss above it, above the candle high, and a target here. It could still be worth looking for a retracement of that candle as well to get a bit better R2R. I would look at the lower time frames, 2 hours, 2.5 hours from now, and see if a correction seems likely or not. I think using in that case an oscillator makes sense, because if there's divergence, for instance, on the maybe on the 50-minute chart, depending on how things look on the 15, see if it makes sense to aim for retracement or not. All right. Now the target 72.50 is, I think, a moderate target, because we would be only aiming. If you look at the context of the target, it would be basically here, right? And I think that's pretty doable, because even if price gets here, it's a doable target, even if this is a bullish environment, because of the fact that if price were to, same problem with the euro dollar, basically, we got momentum up, momentum down, momentum up, momentum down. It's a whole mixed bag. So even if price falls here, it could still bounce like this and make a rally up to retest this top right in here and stay kind of within these support and resistance levels. So the 72.50 target is decent, because even if it does bounce strongly after that, I think that it could reach that support level before making that bounce. So targets like that aim for a level that is not too controversial. If we would be aiming for, let's say, 69-ish, right? That would require the price to break through the support level. And that's a lot tougher. It's a lot more difficult. It's a lot riskier, because price could bounce up, as I said, like this, or it could stay and correct long like that before it breaks. So that's a lot riskier target. All right, this is pretty strong bearish action on all time frames. I was trying to see if there's anything that isn't bearish, but I think that literally every time frame is bearish. Um, if you took a break in here somewhere, or a break of the support level, then you're doing very well. That was I think about 1.5 hours before our trading room here. But at this point, I think that it's too late a bit. I mean, in the sense that this 4-hour candle has pushed already quite a lot, quite a lot. This is a sizable candle already as is. And shorting it right here, I don't think provides much benefit. I mean, the candle could end up a bit lower. It could end up like this, of course. That's true, but I think the same is valid like the other time frames. The other currency pairs. Unfortunately, I think at this point, the only thing that would make sense is just to wait for this candle to close. It's getting a bit repetitive, but same story here on the euro yen. Let this candle close. It's probably because the scenarios here, the structures are quite similar, right? We have on all of these pairs, we have a kind of a light pullback within a strong momentum, and we're seeing a break, in fact, right? So from that point of view, I think that's why we're having that. And yeah, I think that letting this candle just close near the low, hopefully not too big of a wick, otherwise it's invalidated, waiting for a retracement to seek a continuation of this bearish momentum that we're having is at this point, I think, the only way to tackle it. It could be on the hourly too, I think, in this case, on the euro yen, because we have a good hourly candle. We already broke through this support level, or we're breaking through it as we speak. So from that perspective, I think if this hourly candle retraces, that should be already important enough. Doesn't have to be the 4-hour candle. It could be, but it doesn't have to. It could also be the hourly. On the 5-minute chart, we see perhaps, it's difficult to say. We'll find out soon enough. This is the fourth candle. There are a couple of bullish candles. I'm not sure if we have two strong bullish candles because these look pretty small and doji-ish. So I think this is only one. If this candle or the next shows bullishness, we might get the correction on the 5-minute chart to retrace that hourly bearish candle. Go up to the 50, I would say, which is a small supply demand zone here as well on the 5-minute chart, and then turn around. That could be interesting. 119.30, 119.25, I guess. And I would say a stop loss above this strong candle should be enough, this candle high. And the target would be probably minus 61.8, 118.66, sorry. That's I'd just say a smaller, conventional, moderate target. Nothing fancy about it. Just a typical minus 61.8 target of this fit. All right, so we can keep an eye on this 5-minute chart. All right, so that was a couple of the majors, I guess. We still have dollar CAD we can look at. I think the Kiwi we didn't look at yet. We still have the pound yen we can look at. Maybe the euro pound, pound odd, euro odd. In the meantime, two questions. What do the MAs say indicate? The moving averages basically are providing an average over a certain number of bars. Depends on the number you choose. If you choose 20, you would see the average of 20 bars. If it's SMA, then all those 20 bars have the same weight in that average. If it's an EMA, it's an exponential moving average, then the most recent bars have more weight in that average than the bars from further in the past. So that means that these bars have more importance than these bars. I always use EMAs because of that. I like that. I think it makes sense. I guess I got just accustomed and used to the EMA as well. And so if you use a lower number like 20, then it's going to show you a bit more information about the short term. If you use a higher or larger EMA like 100 or 200, that's going to show you a bit more information about mid or long term because there are more bars taken into consideration with that average. And the EMA is useful because it just shows kind of easily what the moving average is. That means that we can see if there's momentum going on. If we see that there's here, obviously the momentum would be lower. right? Down, because the bars are moving down, the moving average will go along with that. And the moving average will provide support or resistance because at times price will move away from the average, but at certain moments price will make a retracement back to the average, either by going sideways so that the moving average catches up. Let me show you an example. Let's use 21 EMA, right? Either by going sideways, in that case, it's retracing by time and by the fact of sideways movement. The EMA catches up in a way, or price hits the EMA and uses that as a resistance to move further lower. Or it will make a more impulsive retracement, as we see that is going on right now, in fact. In that case, price is actively seeking going back to its average. And because I think the moving averages especially work well in Forex market. Maybe I'm biased, but the reason is because I think that with stocks, let's say you can have just stock go up and up and up and up long term as it creates more value for the stockholders, shareholders. But with currency pairs, there's always two sides. You got two economic units, two economic zones that are offering a currency, and that's all relative. And at times, you're going to see price move away from its average. But with the currency market, there's always a very high chance it will, at some level, make a retracement back to its average. So there's more back to the mean kind of environment. So from that point of view, I think moving averages symbolize that. What is the average? What is the mean? All right, next question was how to validate the enter to a rally. How to validate to enter a rally. Let me think, which pair was that, Mario? I forgot which one we were looking at a couple of minutes ago. I guess maybe this one. But this is a decline, so you're probably, which one was a rally? Well, in any case, just in general. Oh, okay. If you're looking to use candlestick patterns, you could use, there are, I would say, a couple of ways to approach it. You can use the candle close, right? For instance, if we're looking for two bearish candles like this to indicate the end of this correction, then we could take the candle close right there. We can wait for retracement of the candle, which in this case doesn't make much sense because we got a wick here. So let's take another example, perhaps. Let's see. Here, right? It's a bit small, but basically you can take the trade right at the candle close if you think it's very interesting. You can wait for retracement of that candle halfway or to the open or to the high. Or you can wait for the break of that candle low, for instance, to indicate the breakout. So it depends on the structure and what's going on in the overall market, which one makes sense and which one is better. But that's how you can use candles to take a trade. The close, the break of a low, or the retracement to halfway the candle, or the retracement back to the high. Those are the things you can think about basically for taking a trade when using candlesticks. So now we're seeing a bit of a wick here on the 4-hour chart, but that doesn't mean anything. Don't forget this candle is not closed. It could do anything it wants within the next 2.5 hours or so, and or 1.5 hours. What was it again? And therefore, this provides no information to us. As far as we know, it could end up right back here at the close, at the low, and it looks very bearish. So don't get misled by open candles that look bullish or bearish. It really doesn't mean anything until it closes, because the nature of that candle, the structure of that candle, is still vulnerable to all of its movement of the open, the time remaining. This hourly candle will be closed in 24 minutes, and if it is anything like this, then obviously we got to pause a bit with thinking about shorts. for the moment, unless this 4-hour candle closes. So I was talking about shorting. Now, considering this big bullish momentum candle, I'm not shorting as yet. This is too strong of a 5-minute candle for me to immediately short into. What I would be looking for is how price responds into this zone. We can keep an eye on this 5-minute chart to see if we get any kind of reaction here. Do we get a 5-minute candle and again a 5-minute candle like this? What I probably would want to actually wait for is 5 to 6 candles not breaking this high. Something like this. I push down and a pullback here, and I think that could be an interesting kind of hook back as a weakness for further downside. This kind of impulsive correction is dangerous to short because you don't know how far it can push. I would have rather preferred, if I was looking for shorts, so what I would rather have preferred was kind of a bear flag pattern up to this zone. I would have been interested in shorting this kind of channel. Considering the power we're seeing here, for whatever reason, I rather wait for signs of weakness. Maybe it's the euro dollar that's pushing it, I don't know, or it's the dollar yen. Dollar yen is bouncing at this point. I was saying I want a daily 2 days, but that maybe if I look at the 4-hour chart, if we do get a bullish candle like that, like this, a pin bar, and we get one more bullish candle, or even this pin bar, in fact, because we already had a couple of bullish candles before that, I might be enticed to take a bullish candle like that. We got a good run down. We are seeing divergence. We have a big support level like that, 105.50. So if it closes bullish like this, there's a big wick here. If it closes near the high, if it's bullish, if it closes above basically these candle closes and lows, I think that does actually, this could also be a reversal signal as well. The next candle, we know you could get a retracement of that candle before you get a move up. So I think both an entry right there or upon the 38.2 fib, if we put a fib from here to here on the candle itself, 105.91 for instance, 38, both could be good entries. Stop loss below the candle low or the bigger bottom. I think it's about the same. So I think that would be an interesting signal. I think the confirmation would be a second bullish candle, but a big pin bar like that, considering the downtrend and support, I think does make sense. Anyhow, the euro dollar, is it moving? Yeah, we're getting a bit of a bounce at this support trend lines here. And if we have it at the end of this hour, anything like a doji like this, with a wick at the bottom, significant wick like this, I think we're going to see a bullish candle next hour. And then we'll probably see a doji again. And I wouldn't be surprised if the 4-hour candle ends up like this, maybe small bearish, but with a big wick at the bottom. And that should be enough to get a bounce to the upside. Here's the open. And this could be a hook back. Let's take a look at lower time frames, 5-minute chart. A wick and a bullish candle at the support level. If we get maybe one more bullish candle like this, and then we should get a bit of a follow through to the upside. If we then see a hook back to test the support, it could be a bouncing spot here. We can see clear momentum to the downside on this 5-minute chart, but we are at support and we know that the 4-hour candle is still bullish. And we have time left before the next 4-hour candle closes. So this could be a hook back for a bounce up. All right, euro pound, let's see. I don't like trading euro pound, to be honest, but At this moment, going through a kind of this looks like an ABC correction for those that like waves. Pretty neat. Uptrend seems to be continuing at this moment. Bullish momentum. This is the fifth candle. If this fifth candle closes bearish like this, and I would like a close near the low, then that could be engulfing twin. Barely, but it just qualifies. And in that case, this could be a hook back for a bigger correction downwards. The upside has been corrective, I would say, so far. And that doesn't mean that the downtrend reversal will automatically start immediately. Sometimes trends can be corrective and it can still continue. But for me to be willing to trade upside, I would really need to see a bullish candle that is probably, I don't know, at a lower spot here. If we get some retracement like this and we see a bullish candle all of a sudden engulfing twin like that, that could be an indication that this is just a triangle and we're going to get a bounce, for instance. This moment, I would not be interested in longs despite all the bullishness that we see on the 4-hour and daily chart. In fact, if we have anything of a bearish candle here, that could be a signal that we get a retracement to test these support levels again. I don't like going long either at the moment because the top is, the resistance is pretty close. And shorts at this moment, neither, not at this moment at least, because I don't think we have strong enough, price action reversal candles at this point. What did you think, MJ? Was that about the same you were thinking too? So in the meantime, let's take a look at some crosses, pound odd, continue with these crosses. We see a bit of a wick here on the pound odd on the daily candle. Let's measure this monthly candle. I know that sounds funny maybe, but let's take a look at how big this wick is. Very quickly. So it's about 33% apparently. That is a pretty big wick. So the close was not that net near the high. But it's still bullish. It's not definitely a reversal wick, but it's not a great continuation candle either. We're now challenging last month's low, which is always a tough level to break, and it could be a bouncing spot. All right, so we're going to have to see, got a daily wick already here. Considering momentum, I think we could see a bit of a bounce off that support level as we speak. So from this perspective, the Aussie might be running into some weakness problems here. I mean, I know we've already had, a great downtrend, 1,500 pips to the downside almost, and it all started up in here where I was already indicating that I was expecting retracement at least. It turned out to be a reversal, a huge down move, but now I'm thinking about the other way, right? That we can get a retracement to the upside. Because we have 3 bullish candles. The second one was not that great, I know. So it could be similar to what we had here. And price still fell, and this could be retracement 2 for one more fall. I think that changes if this is a bullish candle right here. In that case, we're looking at candle number 5, not breaking this bottom. It would be another bullish candle, indicating a potential hook back. We also got the daily wick plus the monthly low, and we could it wouldn't be surprised to see a bit of retracement of this downside. So that could be potential reversal, I would say. 88.6 bounce. Maybe up to one of these targets at first, right? Who knows how far it can push, but as I said here, you never know how far they go. What I did think was a retracement, like an ABC, so up down to here, but look at that, it went a lot further than that. And that can happen sometimes. And that could happen with this one too. But for the moment, I would say, conventional moderate target is the minus 61.8 and 195, round number 2, plus we got some bottoms and tops here. But it all depends on this candle close yet again. Candle close would have to be close to the high, would have to be above the previous candle close and low, right? Because if it closes somewhere in here, for instance, it will end up bearish, and then in that case, it doesn't look like any reversal at all. It doesn't look like a great continuation to the downside either, so I would just stay neutral. Same with the euro pound. Sometimes the best conclusion for some pairs is neutral. What can you do? There are a lot of pairs, luckily. Euro odd, let's take a look. Yikes. 4 days going sideways. All right, my gut feeling says we'll break this box to the upside and then head lower. Kind of like this, and I like that. We got a strong weekly candle still. So I think we could see a follow through of that weekly candle to test the bottoms in here. So it all depends, I think. If we manage to break the support, we will probably see that follow through. But if we break to the upside, I think we're going to hit resistance and turn around. Now that would become invalid if price, of course, breaks through this trend line, for instance, and breaks through the 61.8 fib probably. If it does something like this. But for the moment, I am bearish. All right, we got a lot of pairs left. Dollar CAD it's quite funny how all of these currency pairs are really, really looking alike. You see this kind of motion of momentum, and it's getting stuck really with support and resistance on both sides. And it could be because the market is kind of bouncing off support and resistance in anticipation of the news event next week. Obviously, there's a big unknown factor to that. How are the markets going to react? What decision will be made? So there are a lot of unknown variables to that. So I think that we could start seeing probably price bouncing off support and resistance more and more as we go along. Eventually, maybe with breakouts, very quick breakouts. So that could, be possible the next 2 weeks. We'll find out, depending on news events and I guess how the polls are looking like and stuff like that. But yeah, this anyhow, back to what I was saying. This looks very familiar to all these other pairs. This just looks like the pound odd 4-hour chart, right? Is this an upside? Is this a hook back from upside, or is this a continuation of this momentum? All of them seem to have that kind of same vibe. And when I look at this one, this is candle number 5. was slightly bearish, but there is a bit of a wick here. It is about 1/3. So I don't think the bears have great control at this moment either, considering that this is the fifth candle with a bit of a wick. I don't think the bears have great control on the dollar CAD. It seems not a great pair at this point. This downside looks corrective. Slow price action, slowly moving lower. But we never know how long this corrective push can last. It could keep pushing like this and keep doing that, right? Keep in that channel, maybe even break through support, make a bit faster downside. So that's a bit difficult. At this point, daily had a doji yesterday. I don't know, it doesn't look that great. I think for me to be bullish, I would need to see some kind of pin bar probably, or some bullish reaction like this, then maybe even a bullish candle like that. All right, last but not least, quickly, the pound yen. Looks exactly like the pound. Big wick, continuing lower. I guess also the same analysis. This pound 4-hour chart. Let's see how it closes, whether it's near the low or not. All right, let's take a look. Euro on a 5-minute chart. All right, we got two bearish candles. So that would have been the earliest signal to take, as I always talk about two bearish candles, that would have been the earliest signal to take a short. That indicates that this bullish momentum is over. The next signal would be basically on a hook back as price fails to break this top. This is already candle number 4. So if the next candle failed to break this, this is probably a hook back for further downside. Considering all the momentum that we've seen already on other time frames. One thing to consider is this 1-hour chart, right? Let's see how it closes. If it's a doji like this, I think the bears are still in control. And this 4-hour candle. Euro dollar, I will repeat that, no problem. Basically, at this moment, I think the bulls are in control based on the candles that we see. However, if this 4-hour candle is bearish like this, when it closes, which I think, if we calculate it correctly, is 2 hours from now and 6 minutes, then that would change things. In that case, I think that the likelihood of this support breaking is increasing. And I think we're not in the bullish environment anymore. I wouldn't be looking for longs. That's one thing. And I either will take a bearish trade if these support lines break like this and a hook back, or even if a candle is strong as this and close near that low, I would maybe even consider taking a short in New York session when this retraces, when price retraces this candle for a follow through of that momentum. If this does not close bearish, and at the end of this 4-hour candle, the candle looks something like this, for instance, with a big wick, then I think there's actually good potential for upside continuation. Or if it has, let's say, a candle that is, even a doji is still okay. If it is bearish, but it has a big wick at the bottom, then I think it's neutral probably. Depends how big this wick is. If the wick is more than 50%, it's probably more bullish. All right, so if this is, let's talk about this candle. If this candle is something like this, that's clearly bearish. If it is something like this, it is clearly bullish. And if the wick is something like halfway, but the candle is still bearish, or about, this is about 60% wick probably, then I still think it's more bullish. But obviously, this is more of a mixed signal. All right, 5-minute chart here. We got 1, 2, 3, 4, fifth candle, a doji. So if this candle is bullish, I think we are seeing a bounce, and we are seeing a hook back here. And this could be the start of a rally to retest this top. In that case, the 4-hour candle will end up bullish if price ends up somewhere in here. However, if price moves up here and then starts to move down like this and then up like that again, then it's actually looking more like a bear flag. In that case, the 4-hour candle will probably indeed close something like it is now, and we should see downside in New York, I would say. Four-hour candle pound, we were talking about that too. Let's see how that closes. So I don't have anything really new to add at this moment. We looked at, I think, all the important ones. Kind of in a way, a bit of a tough spot because of the momentum up and down, because support levels are close by. There's always something that I think doesn't make one particular currency stand out at this point. If I had to look back at everything we analyze now, I would not be able to signal out one or two that I really think are better than the others at this point. Pound dollar is reversal, dollar yen is reversal, pound dollar is continuation. Here dollar is some kind of a mix, I guess. Maybe the Aussie engulfing twin, I don't know. The difference with the Aussie and the pound odd is that if we get engulfing twins, the Aussie already showed weakness here. Aussie showed weakness, whereas the pound odd, this is quite a small push compared to the odd USD. So 1 minute from now, we'll have a candle close. It'll be interesting. We'll find out this 5 minute if there is a potential bounce or not. Looking at this candle, I wouldn't count on it. Looking this hourly, I wouldn't count on it either. This is looking decently in control. There it is. That's the close. Okay. So 5 minute chart, I don't think this is not screaming bounce to me. It could still bounce maybe later this hour or whatever. You could get two bullish candles like that, and that could be the signal that price might make that retracement. For the moment, based on this, we wouldn't be able to say so. 1 hour is also bearish, so nothing of a reversal has yet to be seen. I think that there is still a potential for that, though. We got 2-hour candles left. We are at support. So if this candle, for instance, dips below this low like this, ends up bullish, and the next one ends up bullish like that, then I think that is a bounce, and there could be a bit of a bull flag and continuation like that. Just to summarize it, I guess for most of these time frames, like the euro dollar, pound USD, I want to see either wicks here or candle closes near the low. Here, candle close near the low. Dollar yen, candle close near the high for reversal. Pound yen, near the low for continuation. Euro yen the same. Aussie the same. Engulfing twins. Kiwi was not that interested. Pound odd near the high for reversal. So I think 4 hour probably is the main chart for this trading day. Let's see. Ergo is asking about Swiss euro Swiss franc. And I don't look at it, but now that I'm doing that with you, I see strong momentum candle here on the weekly, relative at least to the other ones. Clear bearish momentum. 1 hour has a bit of a wick. So I think probably a bit of retracement on the 50-minute chart for follow through to the downside. That's what I would expect. If this 4 hour candle holds, I think it's just good for downside continuation. W forming W, you mean like a reversal? I don't think so at the moment. We broke this bottom, so this is not showing a higher low at the moment. This wick is not enough for a reversal trade, in my opinion. It is showing that the bears have a bit of difficulties with holding control as we're approaching this bottom, but I don't think that's enough for a reversal up to the upside. Unless you're looking at, I don't know, a different time frame maybe. Let's see. No, I don't. For the moment, I don't see any reversal potential here to the upside. But I'm not a big fan of the Euro Swissy, so I would be always probably a bit more cautious, with this pair than other pairs. All right, so that's a bit of a bias from my side. Well, folks, thank you so much for being here. We got tomorrow's strategy. I want to take a look at fractals. I think you're going to enjoy that. We're going to take a look at how you can use them, why you should use them, why they're handy, why they make it easier to look at charts, etc. How you can use them. We got a whole 1.5 hours, so I think you're going to enjoy that. That's tomorrow, and Nana takes a look at time factor Wednesday evening, and Nana and I together take a look at British referendum on the European Union membership Thursday, and next week Tuesday. 2-part webinars, in fact. And wish you all great trading. Talk to you soon. Cheers.